Today, I'm going to talk about this interesting clause of the IRS code known as Section 121 exclusion. And I will explain that exclusion by giving example of my own story. So here's what happened. I lived in a house from 2011 to 2018. It was a modest, small house, a beginner house. And I had 2 kids, and I wanted to move out to a bigger house. And fortunately, I had enough money to actually buy another house. So I bought another bigger house, and I simply rented my original small house. So this was 2018. And I did this move in August of 2018. Let's just put the exact date to be 10th of August. Now, I don't remember the exact date. It was in the first week of August, but let's just make it 10th of August. Now, a couple of years passed by. 2021 came. And then I came across this Section 121 exclusion. So my CPA told me that if you sell this house within 3 years of leaving that house, you can get no capital gains tax up to $500,000 of capital gains. So I started investigating more because this was intriguing. My house price had doubled by then. I roughly calculated my capital gains, and my capital gains was going to be more than $500,000. So what I found out was that what Section 121 exclusion does is that in the last 5 years, or out of last 5 years, if you have been living in the house for 2 years, then if you're single, it allows you complete tax exemption up to $250,000 of capital gains. Or if you are married filing jointly, then it's $500,000 of capital gains is tax exempt. That means if you get $600,000 of capital gains, then you pay tax only on the last $100,000. A huge benefit. You could have seen, I would have saved hundreds of thousands of dollars. So I woke up and I figured out what to do with the renter, and I listed my property. Now, what happened is, by that time, it was April, May, and I had to stage my property. So it took me some time, did some work in my property. And by the time I actually got offers, it was already July. Now I have a tight deadline. Now, thankfully, the market was hot. So I got 7 offers. And all the offers were above asking price. Now, the biggest dilemma in front of me is to choose the highest offer or choose the offer that can actually close before 9th of August. Initially, I thought you just need to get into contract before 9th of August. But when I really talked to multiple CPAs, they all told me that the property needs to close before 9th of August. The deed has to be transferred before the 9th of August. So that made my decision clear. I chose a buyer that could close as soon as possible. And by that time, the time had moved on again. Ultimately, I find a buyer who promised me to close in 15 days. And he closed the property on 6th of August. Till this date, I'm thankful to that buyer. Because of him or because of them, I was able to save $100,000 in taxes or even more. So find out if your situation can yield you this tax benefit as well. Again, do not rely on my experience. I'm not a CPA. Go and talk to your CPA and find out if you have a rental property that you lived in, if you sell that property, will you get the same benefit or not? This is definitely worth exploring more.